initially, when the announcement was made that there was going to be a 25 basis point cut in rates, the market was extremely happy with that. But as the day went on, something kind of interesting happened. So luckily, this class is at 8 in the morning. The market has not opened yet. So this is yesterday's results. So the U.S. Large cap sector S&P 500 was actually down 0.12%, which is counterintuitive. You would think that with the rate cut news, the market would be up. It was not. Mid cap and small cap, again, typically going to be the ones who benefit from this rate cut. They were high midday. Like, I think they were both up over 1% at one point, if not close. But they basically traded and they ended even at 0.02%. So little changed after this very choppy day. They even went negative at one point in the day, as you know, the S&P 500 did. So I was reading the news and I was watching it, and I was refreshing my my stock news thing on my phone, and I was like really confused because I'm seeing like 1% up, 0.25% down, and it's all over the place. I'm like, this is really interesting. Why is the market so volatile in this, what is traditionally supposed to be really good news, that the Fed is cutting rates? So I have a couple news articles I want to read because there is a reason that the market was not particularly thrilled with the rate cut announcement. And it has to do with the overall economy as well as a bit of politics. So you guys know how, or I assume you guys know how the Federal Reserve makes its decisions. So economic data comes in, they go into a boardroom, they review it, and then they decide, do we keep interest rates the same or do we lower them? So that's kind of the idea. So they go into this meeting and everybody's kind of anticipating, the market is anticipating a rate cut, and they do cut rates. However, there's this comment from Fed Chair Powell. He says, you can think of this in a way as a risk management cut, he says. We have a very different picture of risks that have emerged as the labor market has begun to cool versus the threat of inflation. So there's two things that the Federal Reserve is trying to fight right now. The first was tariff inflation. So that was the big narrative throughout the first part of this year, which is that Trump enacts these tariffs, prices are going to go up because companies aren't just going to eat that through their profits. They're going to pass that on to consumers. Consumers can spend less, inflation goes up, right? That's bad for the economy. That has actually kind of subsided in at least the market narrative, because some deals have been made, with some countries. The tariffs weren't quite as bad as we had anticipated. There was I think it was at one point they were talking about 150% tariff with China. I think that has kind of subsided a bit. That kind of tariff war has been resolved in some capacity. There's also a lawsuit going on right now. There's a group that's suing the federal government, at least the executive branch, saying that that was an overuse of executive power for Trump to say there was a national emergency on trade, and I get to now do tariffs without anybody's input. So I think that a lot of the fear around tariffs, especially with inflation readings not being so bad, has subsided. However, what then has happened is the labor market, so unemployment is up and new jobs that are being created are slowing down, and unemployment going up. So the concern is that actually the economy is starting to slow, while inflation is relatively high, which is what's called stagflation. Have you guys ever heard that term in any of your economics class? So stagflation is when you basically have the worst of both worlds. You have high inflation, but you also have a lagging economy. Usually it's one or the other. So we have a very mild stagflation right now, and that was the concern. So when Fed Chair Powell said, this is a risk management cut, what he's saying is that we're not super convicted that inflation is not as big of an issue. What we're more concerned is that the economy is starting to lag, so we need to bring rates down a little bit more. So what that did was that kind of stifled the idea that rates are going to be lower and lower throughout the rest of this year, because they can only cut them so much if inflation persists. So there's this quote This is from a chief investment officer at a investment firm in California. Powell tempered some of the initial enthusiasm in the markets for a more aggressive path of monetary easing. He noted the softness in the labor market, but reserves a large cut for a more serious condition that is not present in the market today. The Fed also raised its inflation forecast, highlighting a delicate balance between setting monetary policy to offset a weaker labor market versus bringing inflation lower. So that's kind of happening on the economic side.